So we got most of the work done. So my goal is to quickly finish the main parts of the course so that you know what trading is, you have to get started, your platform, and you know how to read a chart and things like that. So as soon as possible, finish these bits, upload it up, and then what I'm going to do is I'm going to go through each and every section in detail, in depth throughout the next few weeks. So each section is going to be highly detailed as we go. Amazing. So in this part of the course, we're going to look into the language of price, how to read a chart. Right? There's so many ways to read a chart. So let me quickly show you the most famous method. I think one of the best inventions out there is the candlestick pattern. It's a Japanese technique, I think. It's the anatomy of candlesticks. So you'll see different chart types, but we will focus exclusively on the Japanese candlesticks. But they tell us a full, complete story. That's the good thing about this. So when you go into TradingView, you have these bars. So what I want, before we go into the candlesticks, I want you to realize that every single thing out there, the indicators, the candlesticks, they're all just information, right? So, like I said before, psychology is number one to be profitable, and understanding the market, understanding how price works is going to put you in a better situation than being caught up on the trap of figuring out patterns and then figuring out how colors and wicks work, right? So, candlesticks are helpful. They are. Not saying they're not, but sometimes they could mislead you. For example, this up here, this green color candle, right? So if I take this bar chart, I don't have any information in this bar chart other than the price information. So this is how it used to be back when charts were started, before everything got fancy. It was just bars. You have the price entering and you have the price closing. Don't have any wicks. This is how much the price went and this is how much the price went. So the new wick style is forcing us to not focus on the price, but focus on a picture that is created. Now, this is not bad. Like I said, it's a Japanese style and there's so much you can do with it. I'm not saying it's bad, it's wrong. I'm not saying it's wrong. So the real reason I'm saying all this is you need to realize how the price works. You need to forget about even the colors. You don't even need the red and the green. Just put it into your mind, thinking that looking at a chart in terms of a price, there's no green, there's no red. Imagine all of this is black color. So it's just price opening here, going down, and boom, price closing here, and then opening. That's it. And it's just price. And when it comes to candles, you have a whole different pattern. So what happens in the candle is I have a picture here to help you out. You have candle in here. So this is the candle chart. High is a low and then close. In the bear, there's two types of candles. There's bullish candle and the bearish candle. In the bearish candle, is the high, this is a low, and this is the sign control. And here the buyer sign control. This is the open, and it closes here. So you get it here. A bearish candle is the red color one. Seller sign control. The red candle. So there's more sellers power. There's more selling power. Market opens here. Then the market closes here. Market opens here. Market closes here. Goes down like this and then goes down in here. And then the market opens here and there's more buying power now. Market went up. And what's a wick? A wick is, if you see this live chart, a wick is it went up. Right now it's buying, but it went back down. That's how a wick is created. So there was buying in there and then there was selling as well. So that's why I thought I'm telling to make sure to read the chart in terms of prices first. Learn to read the chart in terms of prices and then go to candlesticks so you know that there's a selling in here. There is selling in here. So now it's not just a buy candle, it's a buy candle with a huge wick. There's a huge selling in here, right? So remember, it's just the market. So you see the price, it's just moving. The price went in here. The buyers went in here, it went down, closed here, it's opening right now. So reading markets is of your, well, it's basically the whole thing. And then the candlesticks definitely makes everything easy. That's 100%. So think of each candlestick as a battle in a specific time period. The thick part, which we call the body, tells us who won the battle between the buyers, bulls, and the sellers, bears. So bullish or the bull, we say for buying, bear or the bearish, we say for the selling. Bullish candle and a bearish candle. Remember this, but if it is too complicated, don't worry, you'll get a hack of it. This is just like driving. At first it's a bit complicated, but this is nothing, to be honest. You're gonna learn a lot more in the future. You're gonna be in around a year from now, you're gonna be like, damn, how far have I come? Trust me, there's a lot to learn in this subject. So the thin lines, the wicks or shadows, shows us most of the extreme prices that were reached during the battle. So this is a 1 minute chart that I'm looking at. If you go into 1 hour chart, I'm just gonna here, so if you can see the 1 hour chart, this is everything that happened within a whole hour. So this is everything that happened at 5 p.m., 6 p.m. So this is everything that happened within a full on hour, right? So there was a battle, there was a buy, and there's a huge sell. But in the 1 minute market, it was a whole downtrend, right? That's how it works. We'll look into this later. So you know what wicks are now. So when this happens in TradingView, just right click and do reset price, and then you'll have the proper view. You can go up and down, and you can go sideways to minimize into the market. You can press Control or Command and scroll your thing to get a better thing. If you want to reset it, right click, reset. So it's just basic stuff. But I'm trying my best to cover everything. Sometimes it's the simplest stuff. People get caught right. So the open, high, low, and close are the 4 key data points with each candle. Now I think I minimized that picture so I can't find it anywhere. But take a screenshot of it and that picture, this one up here. So I'll just quickly make it big so it's all right. So take a quick screenshot if it might help. So now there's single and dual candlestick patterns. Now, there are many candlestick theories. There's many candlestick patterns. Like I said, in my theories, is when you get into our school community, when you go through my school course, which I'll be making, it's a completely different market in there, right? So I'm not going to be talking about these candles a lot. There is a little bit of, you need to realize when you see these candles right now, you need to see where the market is going. That sort of realization that comes with time, that is good. But you need to realize that market works with numbers. For example, right in here, you got this, and let's say, for example, I'm putting this. So let's say, for example, I'm replaying the market to here, all right? And then I'm doing this, and then I'm putting this, the Fibonacci. It's not even a Fibonacci, it's the price doubling thing. So how the market works is price always doubles. So it goes in here, and then it goes in here. So this is just a basic example, and there's a resistance in here. So as you can see, the price went through this and came back, and then it goes up. So if I draw more lines, there's a half line in here. So there's another resistance in here. There's a half line. So it fights, keeps fighting, and then goes through this 50% line, and then goes through this 75% line, and then fights with this 100% line. As you can see, it's fighting directly, completely at this price. As you can see this line up here comes exactly at this line. How did I get it? From this resistance up here, the support. So that's usually how the market works. That's the price. So when I got this price and I put this indicator in to get these up here, and I can keep doing it, keep doubling it as I go. So I can do this and then I can make it bigger. So I'm doubling it to here and I got this. So let's say you are in here right now, and then you're putting up a sell in here. Let's say, for example, you're putting a sell in here, you want to know where to get out. You're going to put stop loss somewhere here, and you want to get out in here because this is the point that could be turning point, right? There you go. That was. So next point could be here, right? If you want to go more, the next point could be here. So this is not candlestick. This is price. This is the numbers. So I get this number. You can actually do this with a calculator. You don't need TradingView. This is just something I created with TradingView. I just took the Fibonacci thing and I did the maths. I've edited the maths to double it. So if not, I can just get this price and I can get this price, double it, keep doubling everything to do the same thing I just did, right? So now thing is, that's how we'll be trading in the future. That's how I want you to trade in the future as well. So the reason I'm telling you, this is just a very simple example. But my techniques in the future, when you come to my school group, when you check out those courses, you'll figure out that it's finding this price and finding the time exactly when the price will come here or when the price will go to the next resistance, when the price will take the next turn, finding the time. It's all on numbers. It's all figuring out the science behind it. It's all, we'll be using a lot of Fibonacci's, and we'll be using a lot of circles with these circle structures, figuring out, example, from here to here, and then figuring out these little turns and things like that using these circles. Circle is a cycle. So using our cycles, we call it time cycles. Common techniques like that we'll be doing in the future in our school group. I'm trying to refine all the techniques. There's thousands of techniques that have come through over years and years, way before computers were invented. So my goal is to have the best techniques in the school group so that anyone who's going through it can learn the best about it. Now, with this course, the reason why I told and the reason why I showed you all this is because now when it comes to candlestick patterns, there's so many people milking these candlesticks saying there's different types of patterns. If this happens, this, and they have made different types of courses on it. Now, I'm not saying they're wrong, but most of these stuff, they're not working every single time. All right. With the price doubling techniques, the angles, they don't lie because we are actually using some information of what happened in the market to tell what happens next. So this is just random. It's a live market right now. So this amount of price that was spent rising here is sometimes, most of the time, it's equivalent. One of these prices, it's not most of the time, it's every time. You just have to figure out which one. So I have other methods to figure it out, but it's a long shot. There's another way to do it, but I'm just doing it as an example. I'll just use the pencil to do this. So this time is equivalent, this price is equivalent to the time that it will be in sideways. We'll be talking about this, and then it'll go down the same amount it went up. So these kind of things, so the market never does something there, right? So this kind of stuff, it's out there. It's not on a pattern or it's not on a man-made technique. We're reading the market as it is. We're checking the market. We get information from the market currently, and then we're gonna go from there. So that's the power of it. But when it comes to different candlestick patterns, there's so many things out there, and they don't work every single time. And then most of it, they're just milking it. So don't go out and buy PDFs for $50, $100 that teaches you about candlestick patterns like Hammer and Doji. So you can learn it, but just don't think they're the best thing in the world, because don't spend money on it, basically. Have an idea about it, but don't spend too much money on it. So I don't want you to just memorize the patterns either. Try to understand the psychology behind them. That might help you. So a Doji candle. So if you go on Google and just search for Doji, now Doji has a very small body and it represents the indecision in the market, the cycle win. And Hammer is a very famous one. So go on Google and type a Hammer candlestick pattern and you see it. Now Hammer has a long low wick. So it tells us that the sellers tried to push the price way down, but the buyers toned back in and took control before the session ended. It's a sign of potential bullish strength. And then a shooting star is actually the opposite of. And then the most powerful two candle pattern is, I think, the engulfing candle, from my opinion. This is when one candle's body completely swallows the previous one. Bearish engulfing is a strong sign that sellers have taken off from the buyers and vice versa. So this can help. It's just that don't give your full trust on it. That's all I'm saying, because there's a lot you need to learn. It's just stuff that you need to get your head around, just have a slight understanding about. So let's go to market structure.